So, welcome to the show. Today, I have David Kamara on, and we are going to talk about how a military coup can lead to a career in real estate. So, with that, David, give us your 30-second introduction, just who you are and what it is that you do now.
Thank you very much, Jonathan. Thanks for having me on your show. Um, so we had a military coup
Well, let's not talk
in.
about that yet. Let's get into that. Let's
Yeah.
get just give me who are you? Tell me where you are right now. So people, we can build up to this throughout the podcast.
Sure. So I live in Michigan. I live in Ann Arbor. I had a career in management consulting, and before that, I actually am a programmer, so I had a computer science undergraduate degree from University of Michigan, which is where I came back to Ann Arbor. So through the winding kind of path of life, found myself traveling way too much and missing my family a lot. And my wife and I have 4 kids. And while the management consulting path was actually very intellectually stimulating and very challenging, and I learned a ton, met a lot of great people, it just wasn't checking the box from a quality of life perspective for me. And so really, I ended up leaving the firm I was with. I ended up starting my own firm and thought that was the answer, which, I mean, it was definitely a lot better because I was working for myself and I was making more money than I was making when I was working for the firm, and I was technically working less. However, I still needed to be at the client, right? So I still didn't necessarily control where I was when I was there and such. And actually, my daughter at the time, she was 8 at the time, she one Sunday was like, "Dad, are you going to work tomorrow?" And really the question was, "Are you not going to be around for a few days?" And so that kind of led to a lot of soul searching conversations with my wife. And we had bought a rental house, and actually a duplex and a threeplex in Chicago when we lived there. The entrepreneurship had kicked in like early after college when we bought our first house, and just the ability to leverage and buy a property with, if it's your personal residence, it was like 5% down, and we're paying less in mortgage than we were paying for our first apartment when we were renting. So at that point, I was very much about, hey, let's go buy as many houses as we can. Of course, the problem was we never had money. So about a few small things, and then that kind of went to the wayside when the careers took off. But it brought us back to, hey, this real estate investing thing, it works. The business model is pretty simple. Can we go back to that, or will doing something of that nature at scale help get me home more, right? And so that's essentially how I stumbled into apartment investing at scale. So we went from, we have a couple of houses and a couple of duplexes. Can we 10x that? And we said, well, let's try it. Let's go buy an apartment complex. We were fortunate enough in that we had the funds to do it without investors. And really, the plan was never to go build a big anything. It was just, how do we get enough passive income so I can be home more and see my kids and my family more? So that worked, I guess, too well. And a little bit into that journey, a lot of my ex-colleagues and former consulting partners and clients said, "David, we trust you. Why don't we write you a check and you can kind of give us the real estate exposure because you're making it like a stock?" To which at first I was, very humbled, but I said no. I said, I'm not quite ready for that. I'm trying to not have a job, and this seems like another job. But after some time, I succumbed to the pressure in a way, you could say. Really, what precipitated it was there was a really nice opportunity, which was bigger than we could do on our own. And again, here were these folks that were saying, why don't you manage our money? So today we have about 1,200 units, mostly in the Midwest, mostly in Michigan, that we own and manage for investors.
So, God, there's so much to ask you about here. I have a ton of questions for you, but that was a great synopsis of your career. One thing I want to ask you sort of off the bat is, how did you told me that, well, you wanted to scale this. You were doing, smaller properties, and you're like, hey, we got to do something more efficient. how did you make that leap, and what was that first deal like? How did you figure out what to do? Was it all just trial and error, or did you go get some coaching or read some books, or how did you make that leap?
Yeah, so again, early 2000s, my wife and I graduated college, moved to Chicago. We buy our first house a year later, and I'm like really fascinated with the potential of, let's buy a house a year every 6 months, as often as we can get a down payment saved. I went to a number of investing seminars then. It was mostly single family focused. I read a ton of books. We ended up buying two properties on the same day in 2006 in February, a duplex and a threeplex. And we bought them in Gary, Indiana, which is not a great place. Just it's deteriorated a ton since the steel mills left the city. So we bought in a place where I felt, if I lost money, I could afford to lose it. It wasn't going to be a big, massive investment, but it also cash flowed from the day we bought it. This was subsidized housing, so the rents were almost guaranteed. The tenants I had were actually really great. Like, they stayed there, and I had them for probably the better part of 10 years, same tenants. And I mean, I had worked on the east side of Detroit in a gas station before, so I was very comfortable in a quote rougher environment and neighborhood. And I mean, people are just, people are conscientious and grateful when you treat them well, and that's essentially the attitude that I took into that environment. So when they needed something fixed, I made sure it got fixed. If they wanted to paint, I made sure they could paint. And so all that worked. I was self-managing all of that, right? And so anytime there was something to be fixed, that was me. And if I needed to find somebody to go do work, then I needed to do that. My wife never allowed me to go there after dark. She said, "Hey, I need you to come back." But so that was a great experience in just managing property, right? Kind of mom and pop style. We then bought another house in Forest Park, just in the suburbs of Chicago, where we lived. Interestingly, bought that house in an auction. It was a house I was looking at buying, and then I drove by it a week later, and it was listed for sale in an auction. So I ended up attending the auction. It was in Rosemont. It was very much what you see on TV, where you get carried away with the auctioneers driving the price up, but I ended up winning it because I'd actually had been in the property, and I knew what it was. Ended up being a great deal. Rented it probably a week after we bought it. And that was cash flowing as well. So this was 2006, 2007. Of course, that whole Great Recession happened. And we also learned from, single families are tough in that, when tenants fall in hard times, you're paying that mortgage payment out of your pocket. If you have great tenants, it's great, right? Things show up, money shows up. You don't get bothered by small requests like, "Hey, my light bulbs are out." So that was the first kind of foray. And then, of course, my wife and I both did grad school while working. We started having kids. I ended up transitioning to management consulting. So we kind of got derailed a bit on the path to real estate investing and continuing that. So fast forward to, we moved back from Michigan, sorry, from Illinois to Michigan in 2012. Ended up buying another house in Michigan, close to where we live, as an investment. And again, there was just, hey, it's passive, it makes money, there's some cash flow, there's not a ton of time needed from us to manage it. But really, yeah, it was a lot of trial and error and trying to learn things on our own. And we didn't truly get into, hey, we should scale this and make it something real until much later on, right? So I think the thing that really moved us there was the fact that in the consulting career, I was doing really well. I was progressing right up the management ranks to become partner at a firm. But then at the same time, I was just not home a lot. I worked for a firm in New York City for a little bit, between 2012 and 2015 or so. And I was just not home, right? And so we looked around and just thought that, I feel like you kind of have to know yourself enough, or know what you want, or be bold to say what you want, right? Because I mean, clearly the alternate path was a comfortable one that would lead to a comfortable life, but then you had to wait for, I don't know, another 5 to 10 years, and I just wasn't willing to wait. And so the risk is, well, you go out on your own, you kind of try and figure out this new business, which for me it wasn't all that scary because I'd already seen it on the single family side, right? The scary part was the amounts of capital you're gonna have to go commit personally or find through investors. And I think that was the bigger kind of mind leap and
So did you
bigger
just decide, like, did you just say, okay, I got to start buying bigger property, and then you just found what, like, you figured out how much you could afford to spend, and you just found a property? Was that how it came about, or?
Not exactly. Yeah. So you
Yeah,
had asked the question whether I just did it on my own or whether I did it
yeah,
with some coaching. I did end up getting some coaching, right? And I think that was also a difficult step in that, as a management consultant, you're literally being paid and flown around the country and the world to advise, quote, the best of the best business leaders how they should run their business better. So it was a bit of a leap to say I need coaching to go be taught how to buy an apartment complex when I've bought a bunch of houses at this point. I think I had 8 units. I felt I knew what was going on, right? But I think so. I listened to a bunch of podcasts, and so I essentially got mentorship, and I went to this investing conference, and while I was there, I met someone who had heard on a podcast, right? And so kind of connected, and it helped that this person was also in my market and ended up having them be my mentor. And really what I was, quote, paying for was I wanted to kind of get there faster, right? I realized that I could probably fumble my way through it and make some mistakes, but I would figure it out. But I didn't want to make big mistakes, and I felt like the coaching price tag was small enough, or would be the equivalent of one big mistake, right? And so essentially, what I wanted was someone who I could call and ask specific questions on a deal I would be doing, someone who has done it before. So essentially, I thought that was very helpful. And I tell people this too, like if you're going to go pay for some kind of a course to help you buy property or really whatever it is, you just have to be very honest with yourself about whether you're ready to do the work, and also whether you're ready to go find the money. In my case, the barrier to entry is, putting down a lot of dollars with zeros behind them, much more so than usual, to go buy something. And that's typically a hurdle that many people don't overcome. In my case, my wife and I talked about it. We're kind of on the same page. We're like, we think we are ready. We just want to make sure that we do it well with good research and time. So I think that was a big step, but once we decided to do it, it was definitely absolutely worth it.
I mean, I was definitely the kind who muddled through, because I love the fact that you were humble to go get coaching, given your background. I mean, I had a similar background of in as a Wall Street lawyer, where I was advising people on, like, billion-dollar litigation, right, and telling them what they ought to do. So when I got into the real estate field, I think I made a very common mistake of thinking, oh, this is easy. I'm a smart guy. I know what I'm doing. I can figure this out. I don't need your help, Mr. Coach, and the irony being now that I do coaching myself. But, one of the things I realized once I went through it was like, oh my God, I've made so many mistakes. Other people are probably making these mistakes too. So at least maybe they can benefit from my pain. Right. But,
Yeah.
But that first deal you did, so you self-managed that deal as well, or did you find a third-party
No,
manager?
no, no, no. So no, so I definitely had learned from managing my first whatever 8 properties myself that I didn't want to manage them going forward, and I frankly wouldn't have the time to manage anything significantly larger. So no, the calculus the whole time was, if you are buying something. So our first deal was 40 units. It was a $2 million deal. It was in Battle Creek, which is where Kellogg is based. It's about 100 miles from where I live, so it wasn't exactly my backyard, but the numbers made sense. And no, the idea was to go find property management that would manage it for us, and essentially we would figure out where to spend money, where to invest money, how we wanted it managed, but we wanted somebody to manage it for us full time.
So before we move on to the bigger deals that you've done, one of the things that I think has always, at least because I haven't done deals in that size, right? So one of the things that's always perturbed me is people talk a lot about finding good management for smaller deals. So how did you find, good management? And do you have any sort of advice for people, or at least, what should they expect if they're looking for third-party management for, sort of smaller multifamily deals?
Yeah, I think frankly, I got really lucky. I did interview a number of managers in person, and I interviewed them while doing due diligence on this first property. And I also had them, multiple property managers, I had them come out and walk the property with me. And I asked them all the same questions and kind of, picked what I felt the most comfortable with in terms of what I heard. But even if you do all that, I think you can still make mistakes. And far and away, the biggest partner who you need to rely on is your property manager, especially for smaller deals. And I think you want to essentially find somebody that you can trust. You want to find someone who is competent. And it's just difficult to gauge that up front through an interview process. You truly don't know what you're getting. So like I say, I think I was very fortunate to find this property management team. I liked that the president of the team was younger. He was hungry. It was a family business. He had worked in the business since a young age. Everyone in the family worked in the business. But again, like I had interviewed other property managers since in different markets, and it hadn't turned out as well, right? So I hired someone who, was sincere and capable and honest, but they weren't as competent, right? So they made some mistakes, not through malicious intent, just they just weren't as, they didn't have as good a team, and things didn't go as well. So I have since sold that deal. I think it's very important to have property management that you absolutely will trust and can deliver for you. So again, in terms of what pointers I have, you trust but verify, right? So my style is I'll ask 1,000 questions. I'll also review a bunch of documents. When things don't seem right, I'll ask and say, explain this to me. And I let them know that I'm paying attention. And I think once they know that you're paying attention, they pay attention a bit more. At least they know what to expect from you as an owner. But yeah, the difficulty, like you alluded to, with properties that are not in the hundreds of units, is you kind of getting property management. I think is most inconsistent in terms of the professional partners that you'll get. There's people that are a step above, residential realtor, right, that would manage assets for you, and they may be very good, but they may not have the time, right, if they're just a one person shop, so to speak. The larger national chains or larger national property managers, they manage tens of thousands of units, and for them, as a 30 or 40 unit person, you're just not very worth it and not very interesting. They're not going to give you the best people on the team, so to speak, just economies of scale. So it's a tricky thing, and you really have to look at that carefully when you start.
And for smaller, just one last question, smaller properties. So what do you pay for management fees and labor? Like, how do you staff those smaller properties?
Yeah, so I think you find the gamut, which is, the pricing model starts at something like 10%, which is all in, no labor, right? It's just 10% of whatever gross. And then it kind of really veers to kind of what you'd expect with larger property managers. You can get to 4 or 3%, but then you also pay for labor, right? So whatever costs they have would be passed through to you. So that 3% and that 3 or 4% category, it's really kind of quote profit for them. But any expenses on site, they usually have as a pass through to you with no markup, right? So those are really good models. And then you get everything in between. You get the 6% plus some labor, you get the 6%, but we'll upcharge maintenance to you. So there's a lot in there. And I think, the more scale you have, the more negotiating power you have, obviously. In my case, what we did was, I think it was probably 3 or 4 deals in, we actually, so we had an asset where we had a fire and the property manager really handled it very well. They went above and beyond where they didn't have to, and they kind of did things that I truly appreciated, that saved us a lot of headache, and frankly was just a great exhibition of trust and respect and overall collaboration. So every deal since then, we have set up essentially an agreement where if I'm doing a syndication, they get a percentage of the GP. And so I think that has also helped the relationship a ton.
So you're still using that same company for
I am.
managing your deals. Okay. And then so I do want to get into the bigger deals that you've done subsequently, but I did lead this podcast off by saying that it was a coup d'etat that led ultimately to being in real estate. So I can't let that Chad continue to hang there without addressing it. So let's go back in time a little bit and just talk about your background and how you sort of, wound up where you are.
Sure. So my dad is from Sierra Leone, West Africa. And this is back in the Cold War era, where there's this kind of fight for the ideology of the world. And so the former Soviet Union gave out a bunch of scholarships to various parts of the world, and my dad happened to be the recipient of one of those. He landed in St. Petersburg and found out that in winter there's 2 hours of daylight. He was not very happy. Not to mention how cold it was, coming from really like being 8 degrees north of the equator. And so he asked if they could send him someplace warmer. So he studied in St. Petersburg for a year, and then they sent him to Ukraine, which is basically Florida. Although Kiev, the capital, is north of anywhere in the continental United States, it's basically in Canada, right? It's like the equivalent of Calgary. So my dad landed in Ukraine, met my mom. My mom was studying English, interestingly. And then, long story short, they got married. I was born in Ukraine. My dad finished his studies. My mom kept him in Ukraine as long as she could. So my dad ended up, he went with the aspirations of gaining I think it was like a med tech degree. And he came back a PhD post-grad surgeon because my mom was like, "You're not leaving yet. You still got more to go." So we moved to the Sierra Leone in 1987. I went to its primary, secondary education. It's a British colony. In the 90s, we had a couple military coups, but the most bloody one was actually as I was finishing high school. And unfortunately, it was pretty bad. The government fled, and really anybody who could afford to leave did so. We ended up going to neighboring Guinea, which is French speaking, to get me out. My parents were going to go back. It was a long, protruded stay, as I was supposed to be going to Germany because we had a relative in Berlin, and the plan was to do a 1 year study of language and then go to school. And the German visa process was taking too long in Guinea, and the U.S. embassy was across the street. And so we said, "Well, we're here, we're waiting. Like, we have nothing else to do. Let's go see what the U.S. embassy has to say." And Sierra Leone has a very huge population of Lebanese as well as Indians, and they're mostly in business. And actually, I went to a Lebanese school because I got a scholarship to go to that school in Sierra Leone, in Freetown. And so at the school, I met a really good friend of mine who, their family happened to have a green card. And so when the coup happened, one day I'm talking to him on the phone saying, "Hey, we have exams tomorrow." And then I get to the exams and he's not there. And so I get home and I call the house, and his dad picks up and he says, "The U.S. Marines showed up with a ship on the beach, and they evacuated all citizens and green card holders. So the whole family is gone. Like, I'm the only one here. I'm just locking up shop and making sure the business is secure. But your friend's is in Michigan." So then we called from Guinea, knowing that they just, got to Michigan, and said, like, this process is taking way too long to get to Germany. If I showed up, would you guys help me? And the family was, again, very encouraging because we're really good friends and good students. And they said, "Yeah, just get here." So I, at 17, boarded a flight from Guinea-Conakry to JFK via Brussels, with $1,000, and that was kind of it. And I get to JFK, and I'm like, "How do I get to Detroit?" And they say, "Well, there's a there's a flight at 2 something. It's $458. I'm like, no, that's half my life's money at this point. That's not going to work. How else can I get to Detroit? They said, well, you go through those doors and you'll see a row of toll-free payphones. You dial 1-800-GREYHOUND. And I'm like, how do I dial letters? Like, I'm used to the rotary thing. Like, I've never been to the US. What is this? So I got a $13 ticket to Manhattan Greyhound Station and then a $73 ticket from there to Detroit. And my friend picked me up, and that's how I ended up in Michigan.
Wow, what a story. That's incredible. And so then getting your paperwork done here was relatively
Oh yes,
smooth
I
compared
went
to.
through a lot of good process. So I actually arrived as a visitor. And my friend he'd started attending community college. So I went to the community college and said, hey, how do I go to school here? Um, I had to get a transfer to an F1, which is the student visa. So I did that. And then so I actually came on my Ukrainian passport because they stopped giving visas to people from Sierra Leone because the coup wasn't going anywhere. Like the coup, similar to what's happening right now in Mali or in Niger. Um, the international community condemns the coup, but the guys are like, "What are you gonna do? Like, we're here." So the U.S. literally stopped giving any Sierra Leoneans visas because they didn't see an end to the conflict. And that is a separate story. There was like a big invasion, and I lost contact with my parents for 2 weeks. Didn't know if they were where they were or if they were alive. It was a tough time. But later, they granted Sierra Leoneans temporary protected status, which allowed me to work. So I was working on my TPS. I was on an F1 student visa. I ended up transferring to University of Michigan and had another F1 change. When I graduated, there's something called OPT, which is optical practical training. So if you graduate in the US, you get a year to essentially get an internship. During that time, I applied for an H1, which is a work visa. And I got that, was in that for a while, and finally got married to my wife and got my citizenship that way.
Well, congratulations on that. I have had my own dealings with immigration and naturalization service through my wife, who's not a citizen. So we have our own stories about that, but not nearly as dramatic as yours, I have to say. Um, so because of the coup, I didn't mean to make light of it at all, but I mean, obviously it's a terrible situation, but it did bring you here rather than Germany, and ultimately led to your start. I thought that was a really interesting story to tell because it really just shows like people can come from any kind of background uh, and be successful in this business. So we have a few minutes left, but there's still a number of things I would really like to ask you about. One thing I would like to ask you about is your focus on the Midwest, right? And I mean, almost everybody I interview on the podcast, it seems like, is focused on in the Sun Belt. And obviously the Sun Belt has been really hot. It's experiencing other problems now, but the Midwest, as far as I'm concerned, is a great place to invest, but it's been really overlooked. What obviously not by people who are there, but I mean by you're not competing with a lot of out of staters, I think. Talk about investing in the Midwest. Why were you drawn to that area? Was it just because that's where you were and you got started and you sort of saw what the market was like, or was there anything more to it than that?
Yeah, to be honest, it was a bit about just where I was, and I didn't see myself flying across the country to go look at deals. But I mean, the more we do here, I think the more grateful I am about the fact that we're here. And like you get into this space and you do look elsewhere, and we bought things elsewhere. We have one deal in the Southeast, we have a deal in Mississippi, which is doing fine. But if you look at the fundamentals, right, the price per door here is still solid and not, just outlandish, right? And then if you look at rent per door, those numbers make sense. And they don't necessarily grow as fast as something in Florida would or in Texas would. But I'm also not necessarily exposed to some of the insurance increases or some of the tax increases or some of those kinds of things. And so we really invest for cash flow. And as long as the cash flows well, we're pretty happy. I think it was Mike who you spoke to, who invests in the Northeast, and he kind of had very similar experience where like I can rent a 1-2 bedroom in kind of small town Michigan, and it rents pretty quickly because there's not a ton of construction, not a ton of new construction. And again, on a cost per door basis and the price per door, what I'm getting in terms of rent, those numbers are like, it just makes sense, right? I may not have the appreciation that other parts of the country may be getting, but again, we're pretty comfortable with that. So I think it's just a matter of, what is your model and what makes sense. So no, so we've been very happy with what we're seeing here. I think within each state, you have to really look at where you're buying, right? So if you look at Michigan as a whole, I think the narrative is, well, it's a net negative migration of population state. I think we lost an electoral college vote based on the fact that people moved out of state a bit. And I think Atlanta or Georgia is now number 10 and we're number 11 in terms of population of the country, but you still have 10 million people, right? Like that's a lot of people. And if you look at, well, where do you buy, right? I mean, there's counties that do have population growth in Michigan. There's a ton of those counties. Well, let's buy in those counties if we can. You can't just, paint with too broad a brush. I feel like every state, there's counties or towns or cities that make sense. And really, you do have to watch out for some of the smaller markets where it's, maybe a one stoplight meat packing town, and you don't want to be in those situations because if those guys move, you're in a really bad place. But a lot of the places we invest are bedroom communities for larger metros, right? There may be 15 to 20-minute drive to where we need to go. So those I feel are very overlooked in terms of, oh, it's a 2,000 village town, like there's nothing here. Yes, but it's also 15 minutes from a 300,000 population base, or it's maybe there's a city 300,000 above, like 20 minutes north and 20 minutes south. Like that's a pretty solid bet. And so we've done really well in those kinds of places, really all over Michigan. I mean, it's a pretty big state. We have assets in the Upper Peninsula, closer to Minneapolis probably than they are to Detroit, and those are doing well as well.
And are your investors mostly local, or are they from all over the country?
I actually just recently looked at this. So my investors are mostly from places I used to live and work. And so I think, yeah, Michigan is still probably number one, but very close second is Illinois, where I used to live. And then interestingly, I have a ton of friends from California that I used to consult with. So those are kind of like the places that most of our quote investor dollars come from.
And has that been like, how do you find investors? Are these mostly connections of yours, like pre-existing connections, or are you doing any kind of like outward marketing, or is it word of mouth from once you have some investors, from whatever town you lived in before, they start telling their friends? So what's been the model for you to grow your business with investors?
I think it's all of those things you say, but predominantly it's just frankly connections that I've made over the past 15 plus years of, corporate and investing work, or corporate and consulting work, excuse me. So I find that like most of the quote new people that invest with us are people that I've known probably for an average of 10 years that have just been on my email list. And I try not to overwhelm people with things that I send out. We don't do any kind of active marketing per se. It's, hey, we have something we're working on, we have a deal, and we closed it, right? And that's mostly what people would hear from me. And maybe there'll be like an article or two that I find the time to write, which I've been pretty bad about. And then maybe if I'm on a podcast, I'll share like, hey, I was on this podcast, and people look at it. But it seems like it takes people a long time to get comfortable, right? There's a lot of noise out there. So it appears, at least for us, that inevitably it's people that I've met through some other path in life that maybe also know some of the investors that have invested with us, and maybe they talk, and then finally they're like, hey, I'm ready to do something. There was someone who invested in our last deal who I hadn't spoken to probably like 7 to 8 years, and the person just called me up. It's like, hey, I'm ready to invest. I'm like, well, do you have any questions? Like, no, I'm kind of caught up on the few emails I've seen and the few people I've spoken to. I'm good. I'm like, okay, if that's how you feel, I'm happy to answer as many questions as you want. So it was very nice. But again, I would say that I'm probably not the best marketing machine out there. So, and I acknowledge that, and I'm probably comfortable with it. So
But
that's
it's a
what
great
I express.
example because I think a lot of people think that they have to have a big marketing machine in order to be successful in this business. And the fact of the matter is, you know, you've been around long enough. I've been around long enough to know that people did this before Facebook, right? Before podcasts,
Right.
before any social media, before email CRMs existed. And it was all just word of mouth and going out and just meeting people and talking to them about what you do and slowly building a list of investors. And it can still be done that way very successfully. And in some ways, you know, maybe even more successfully because having that personal connection with somebody makes it a lot easier to gain trust and to, you know, to raise money in some cases. So if you're
I,
out there,
I personally like I personally like that because I mean it gives me a reason to go talk to people who, I was close to, and maybe just because of time and geography I haven't spoken to in a while. And again, I invest in all of the deals I do, right? Whether it's a syndication or if I buy a deal outright, clearly. But I feel like if the deal is good enough for any investor of mine, it has to be good enough for me, and I make it a point to put my cash into it personally, outside of acquisition fees or any of that kind of stuff. So I feel that while it is time consuming to, connect with someone, whether that's on a phone call or even email or text exchange, I really like it. And I feel like I know the folks that, trust us with their cash, and I feel good about it.
well, David, on that note, we're out of time, but if people would like to get in touch with you, learn more about you, maybe invest with you, what's the best way for them to reach out and get more information?
Sure, thank you. The only social network I'm on is LinkedIn, so I'm there, and our website is capesierracapital.com. And we also have an ebook called The Personal Cash Flow Formula, and that's at capesierracapital.com/cashflow. So you could reach me any of those ways.
All right, well, definitely check out Cape Sierra Capital, you said, capesierracapital.com. Please go there, follow up with David. And David, I really appreciate your time today. It was great getting to know you a little bit better after we had met last year. And I'd love to have you back again someday.
Thank you so much, Jonathan. I really enjoyed it. Thank you.